Incoming transmission standby. Welcome to the Nod News Network. The government has approved a list of countries whose bankers and brokers can now engage in currency trading in Russia. Russia has just published a list of friendly and neutral countries allowed to trade in its foreign exchange market, which was previously closed to foreigners. The order was signed by Prime Minister Mikhail Mishustin and published on the cabinet website on Thursday. Friendly and neutral refers to countries that have not signed Western sanctions against Russia over the conflict in Ukraine. According to the new regulations, banks and brokers from 32 states will be able to participate in foreign exchange trading on the Russian foreign exchange and derivatives markets. The list includes China, Cuba, United Arab Emirates, Saudi Arabia, Turkey, South Africa, Azerbaijan, Algeria, Armenia, Bangladesh, Bahrain, Belarus, Brazil, Venezuela, Vietnam, Egypt, India, Indonesia, Iran, Kazakhstan, Qatar, Kyrgyzstan, Malaysia, Morocco, Mongolia, Oman, Pakistan, Serbia, Tajikistan, Thailand, Turkmenistan and Uzbekistan. This list was approved within the framework of the Federal Law on Organized Auctions, adopted in July 2023, aimed at stimulating direct conversion of rubles and national currencies of the partners' Russian work. Previously, only Russian residents could participate in foreign exchange operations in the country. However, most of them do not have the opportunity to provide liquidity in national currencies in the necessary volumes, which limits the number of transactions, the authors of the initiative said. The previous situation also distorted the ruble exchange rate with other national currencies, due to the recent increase in demand for transactions in these currencies. This trend began amid Western sanctions related to the Ukraine conflict, forcing Russia to abandon the euro and dollar in cross-border trade. According to Russian authorities, this amendment will help increase the volume of payments in the national currency and further reduce the share of Western currencies in Russian imports and exports. The share of national and friendly currencies in the country's trade with the Eurasian Economic Union reached nearly 80% in 2022 and is expected to reach 90% by the end of the year. Last month, it was reported that the BRICS group of emerging economies is also considering switching all cross-border trade to national currencies. The trading volume in national currencies on Russian currency exchanges also increased. For example, the trading volume of the ruble-yuan pair on the Moscow Stock Exchange, MOEX, exceeded the dollar-ruble pair in February. This has been the Nod News Network, transmission complete.